$11 billion. The architect of this theft walked into a courtroom and said,
I don't know technology, I don't know finance, and I certainly don't know accounting.
Hold on, he doesn't know accounting. Yet the largest fraud in history was his masterpiece. And those clueless hands wiped out 85,000 livelihoods.
I'm so glad we could connect today.
From a motel operator to the CEO of a $180 billion empire to inmate number 56022-054. Here is what business schools won't tell you. The biggest frauds aren't committed by villains. They are committed by people who are terrified of losing the ride. (1983), Mississippi. Bernie Ebbers is 41, a milkman, a bouncer, a nobody. He leveraged every cent he had to buy a tiny phone company called LDDs. He possessed a singular talent, making people believe he saw the future. Then, Bernie discovered Wall Street's dirty little secret. They don't care about growth, they care about the hype of growth. So he started buying companies, not to run them, but to announce them. Every acquisition meant a stock pop. Every pop doubled Bernie's net worth, yet the largest fraud in history was his masterpiece. And those clueless hands wiped out 85,000 livelihoods. It wasn't a business model, it was a bicycle. The moment you stop pedaling, gravity takes over. March 2000, the dot-com bubble didn't just leak, it burst. WorldCom's revenue flatlined, but Bernie's loans, still 400 million deep. His stock was the only thing standing between him and ruin. The wheels were coming off. Late 2000, Bernie summoned his CFO, Scott Sullivan, a Duke MBA, a former ace auditor, the CFO of the year. Bernie didn't explicitly order a crime. He didn't have to. He just said,
Make the numbers work.
Sullivan understood, not because he was evil, but because he was trapped. 10 million in options, a mortgage, kids in private school. He was riding the same bicycle. Let's break down the con. It was insultingly simple. Every company has operating expenses like rent. You pay it, you lose profit. And capital assets, like real estate, you buy it, you own value. Sullivan's trick. He took the expenses and buried them in the assets column. Imagine paying your rent, but telling the bank, I didn't spend that money, I bought the building. Cash is gone, but on paper, you're rich. And their lies began to inflate along with the numbers. Q1 2001, 828 million in phantom profit. Q2, 3.8 billion. By the end, 11 billion. Where were the watchdogs? Arthur Andersen was billing WorldCom 29 million a year. When you feed a watchdog steak, don't expect him to bark. And the Wall Street analysts, their banks made $500 million from WorldCom. So every single one of them screamed, strong buy, even as the revenue began to rot like a corpse. Meet Cynthia Cooper, VP of Internal Audit, a straight shooter. Bernie gave her this job. She wasn't a hunter looking for villains. She was just someone trying to make the math make sense. Spring 2002, her team found the glitch, billions in capital expenditures. No receipts, no paper trail, just void. She emailed Scott Sullivan. His reply? It is complicated. Back off. That was the moment the gut check kicked in. Her team worked for 6 weeks, in secret, uncovering a $3.8 billion ghost. She knew the stakes. Send the report, and she is a corporate pariah. But stay silent, and she has to look in the mirror every morning and see an accomplice. Then came the cinema moment. The elevator doors slid open. Bernie was inside. The mentor, the boss, the legend. He looked at her, and his eyes screamed one word: trouble. Copa didn't step in. She turned to the stairs, step by step. She wasn't just walking away. She was walking out of the cult. The 25th of June, 2002, the house of cards collapsed. The stock didn't fall. It evaporated from $60 to 9 cents. Following the crash, the internal audit peeled back the layers. First, the hole was $3.8 billion, then $7 billion, then $9 billion, finally $11 billion. The lie had spiraled out of control. WorldCom was past the point of no return. The 21st of July, the biggest bankruptcy in US history. 30,000 pink slips went out overnight. Pension funds. Dust. And Arthur Andersen, the giant, collapsed. 85,000 jobs worldwide. Buried. Bernie Ebbers got 25 years. He died in 2020, blind and broke. Scott Sullivan ratted on his boss, got 5 years. And Cynthia Cooper, Times Person of the Year, a national hero. Then, Verizon bought the wreckage. They hired back 5,000 WorldCom employees. Guess how many of Cooper's audit team made the cut? 0, precisely 0. Not because they were incompetent, but because they were too competent. WorldCom fell, and Washington panicked. In response, the Sarbanes-Oxley Act was born. Rules were rewritten. Regulations were fortified. Wall Street crossed its heart and swore, never again. But, looking back, it was just theater. Then, 2015, Volkswagen and Dieselgate. Then, 2015, Volkswagen and Dieselgate. Then, Theranos. Then, FTX. WorldCom didn't teach us how to stop fraud. It taught us something darker about human nature. When you get on that bicycle, when your mansion, your status, your entire identity as a winner is chained to a number that must go up, stopping isn't an option. Right now, in a glass tower somewhere, an accountant is staring at a spreadsheet that doesn't bleed red. It bleeds lies. The elevator door opens. The boss smiles. The next $11 billion lie is already being written.